I'm joined by Ernie Lai King, Head of Tax and Asia Practice Group at Hogan Lovells. Ernie, so good to have you with us today. I understand that there are certain conditions and measures that you say South Africans should have actually acted on before this increase in volatility regarding relations between SA and China actually came to fore.
Well, you know, South Africa hasn't been too sluggish in terms of engaging with the Chinese. As far as the Chinese foreign direct investment, outward investment is concerned, I think the outlook still remains positive, even though there is the economic slowdown. And, you know, when we talk about an economic slowdown, we're talking about extraordinary growth of 14% down to growth of around between 6 and 7%. But with an economy the size of China, 6 to 7% is still a significant amount of growth. But what is important for South Africa is the ability to be able to attract that outward investment, because China has realized that the economy that it's aiming towards is a more high value add type of economy, and moving outward and investing in countries of choice will improve the experience and the ability of China to grow. So even though China's economic growth is not in double digits, there's still a very real outward investment drive, and you can see that. What we mustn't forget is the birth of the AIIB, the Asian Bank, and then of course that's got $100 billion US. There's of course the Silk Road Fund with another 40 or so billion US dollars, and then there's the economic growth plan in China, 250 billion US dollars in Tianjin, Guangdong, for example. So as far as China's outward investment drive is concerned, it's more quality now rather than quantity, value add, technology, agribusiness, manufacturing, and we've certainly seen that. You know, we've seen lots of major Chinese companies who have recently visited our shores, and there's two mega projects which we are involved in at the moment, and probably another 2 or 3 on the cards. So South Africa needs to get itself in a position to be able to make the best of it.
If I may ask a twofold question, the particular deals that are happening, which sectors are they happening in? Because I think so often we always think infrastructure and mining when it does come to China.
Yes.
And also for South Africa to remain an attractive investment destination towards China. What can we do to further enhance that appeal?
Right. The one is in the public domain. It's the steel mill, the steel mill project, which is in the manufacturing sector. Then, of course, there's another one which is still not yet announced, but that's in agribusiness. There's another 2 that's in the high value add industry, which we can't talk about just yet. But in terms of making us more attractive as far as Chinese investment is concerned, there's a tremendous amount that we can do. One of which is to try to get around the work permit issue here. There's tremendous problems in allowing the foreign direct investment houses and the companies that wish to invest and discuss cooperation with South African companies. And the work permit issue is just an old chestnut. And the Chinese tell me if they go to America, they go to Europe, they get 10-year visas. Here the visas are still, despite some improvements for the BRICS initiative, is still extremely tough. As far as a sign to be open for business, the South African employment labor laws remain for the Chinese a long-term problem. Security is always an issue. And then, of course, making ourselves attractive as a foreign direct, as a headquarter company jurisdiction for South Africa, as a springboard into the rest of Africa. There's a lot that we can do in terms of re-looking at the SEZ type initiatives, the special environmental zones, and the type of tax incentives and grants that can be given for mega projects.
If we can venture into tax just a little more, I understand that you've recently come forward saying that South Africa requires new formal amnesties with regard to its relations to China.
Yes, well, it's not so much in relation to China. It's another area which South Africa really needs to look at, and that's the need for a new amnesty, a tax amnesty for so-called grey money offshore. As far as the amnesties were concerned, we had one some years back, and then another tax and exchange control amnesty, a much more diluted one, around about 3-4 years ago. And currently we have a permanent voluntary disclosure program, but that is only in respect of tax. As far as the South African exchange control regulations, the South African Reserve Bank is concerned, they allow the regularization of so-called grey money offshore without unnecessarily killing the initiative for people to come forward. But currently, the tax voluntary disclosure program gives no statutory limit as far as the ability of the South African Revenue Service to go back. So even though in practice the South African Revenue Service only goes back 5 years, that is just a practice. There's no statutory limit. So, for example, if somebody took grey money out in the year 2000, say 20 million rand, and it's now worth 100 million rand, it's just not worth the taxpayers' while. They're worthwhile for the risk to come forward, even though they may be able to regularize it from an exchange control point of view. But from a tax point of view, the interest and the penalties that could be levied on money that was sent out and taxes that were not paid since, say, the year 2000, 15 years ago, it's just not feasible for them to come forward. And what I'm saying is that SARS should follow their practice and put it in statute to say they wouldn't go back for more than 5 years.
Otherwise, you run the risk of people running away again and tax elusion and evasion, which leads to an ongoing problem.
And it's probably the perfect time now for South Africa to relook at it, with the weakness of the rand and with the improving international exchange of information agreements. It's the ideal time for South Africa to relook at that.
Ernie, thank you so much for coming through. Always great hearing your insights from all things regarding the relationship between South Africa and China, to even tax amnesties that maybe SARS needs to pay attention to. That was Ernie Lai King, the head of Tax and Asia Practice Group at Hogan Lovells.